Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us on a WhatsApp number that will be flashing on the top of your screen. And we'll also discuss about the banking space and also highlight all the new IPO launches that where you can put your hard-earned money. But before that, let's have a look at what the markets are up to. So Cheryl, seems like the markets are losing the opening steam or the morning gains as of now, but still trying to hold itself in the green.
Absolutely. A very good morning to you, Shrishti. Today was a day of record high coming in for the Sensex. We hit the record high level at open or close to about open, and we did actually hold on to those record levels for a while, but now we've given up all of those gains, be it the Sensex, be it the Nifties. The Nifty Bank that is underperforming, actually that's the one that actually slipped into the negative territory first, but now is starting to recoup some of those losses. Let's take a look at what the broader markets are doing, particularly in today's trading session. The mid cap as well as the small cap index are outperforming the benchmark indices. As of now, you have small cap index that's trading with gains of about 1.3% as we speak. Let's take a look at which are the gainers and the losers in trade. Let's take a special note or a mention about the metal counters, because all the metal counters are actually seeing good gains, with Tata Steel, Hindalco being the lead, taking the lead on the Nifty index. Also to add to that list, you have NMDC that's seeing good gains. You have SAIL that is seeing good gains in today's trading session. Remember, the iron ore prices is at a 5-month high, and this on back of the fact that the steel mills in China have increased the production. Tomorrow we are awaiting for some economic data coming out of China, and what the initial polls are suggesting that the economic data could be better in the month of August. So that also is actually adding on to the optimism in the metal pack in today's trading session. So you have Hindalco, Tata Steel among the gainers on the Nifty. Add to the list you have UPL, ONGC as well as Tech Mahindra that are seeing good strength in today's trading session. Talking about the losing end then is the consumer pack that is actually taking it easy in today's trading session. You have Asian Paints as the top loser on the Nifty, trading with cuts of about 9/10%. You have ITC, Sun Pharma, Titan, Bajaj Finance among the other set of losers in trade. Let's take a look at what the sectoral indices are doing. PSU Bank Index, let's take a note of PSU Bank Index, because remember yesterday approximately 4% gain is what the PSU Bank Index logged in. We saw an initial dip where it went to the negative territory. Now it's actually clawed back, and 1% uptick coming in for PSU Bank Index. FMCG Index is the only sectoral loser in today's trading session. So that's the way how the markets are looking like, and this is all about the listed counters, Shrishti, that we are talking about. But yes, looks like IPO and IPOs galore, isn't it?
Well, yes, Cheryl rightly mentioned, but you were talking about the PSU Bank Index, and just today, what a stellar gains we have seen onto the PSU Bank Index as well as the Private Bank Index, and today as well, we are seeing a bench some bit of a jump up on that particular front. But Cheryl, when we compare the valuations of PSU Bank as well as the private sector bank, then now when we compare it with the 5-year average and the 12-month forward, now the PSU Bank Index or the PSU Bank stocks are not looking that attractive, but nevertheless they are seeing good gains. And can we say the same for private bank names?
Actually, that's the entire thing. Actually, that's the way how the markets are moving in. Looks like the bent, when you say technically right now, seems to be in the favor of PSU banks. But that question we will actually pose to Kunal in a short while from now. But let's bring on board my colleague Somit to talk about IPOs then. And Somit, like I mentioned, IPOs galore, isn't it? There's so many to choose from, but you have done your analysis. You've actually done the number crunching as to which company stacks amongst its peers, and this time the IPOs are from various sectors, isn't it?
Well, yes, 3 different companies, completely different sectors, but around 3,900 crore is what in totality these 3 companies are looking to raise. RR Cable is looking to raise close to 1,960 odd crore rupees, of which 1,780 crore rupees would be via offer for sale, where the promoter and TPG will be looking to exit. Then there is Sami Hospital, which is looking to raise close to 1,370 odd crore rupees, of which 1,200 crore rupees will be a fresh issue, which the company will use to repay its debt. Zaggle Prepaid is looking to raise close to 563 odd crore rupees, of which 392 crore rupees will be a fresh issue which the company will use to acquire more customers and also for product development. Now, firstly, looking at RR Cable. Now, when compared to its peers like Polycab, KEI Industries or Finolex Cable for that matter, the company's revenue growth over FY20 to FY23 has been much better compared to its peer. Its revenue growth was around 31 odd percent. But if you see the company's EPS growth, that has been a bit lower on 16 odd percent. Now this is largely because of the volatility that we had seen in the raw material prices, and that is clearly reflecting on their EBITDA margins as well. The company's EBITDA margins have slid down to around 5.8% from 8.3% that we had seen in around FY20. Now, if you look at the valuations, on FY24 valuations, the IPO does look a bit expensive, 45 times that is the asking valuation, and this is kind of expensive when compared to peers like KEI Industries and Finolex Cable, as well it is expensive to Polycab. But if you see the FY25 valuation, it becomes a bit cheaper, and FY25 the asking valuation is just 35 times, and this is cheaper when compared to its peer. When moving on to Sami Hospital, now the revenue growth and the EBITDA growth for Sami Hospital has been Sami Hotel, actually not hospital, has been much better when compared to its peers like Chalet, Lemon Tree or Indian Hotels. But this is also because it had a very low base because of high cost, and hence the EBITDA growth, if you see, it's nearly 7.9x when compared to in FY23 when compared to the previous year. Also the EBITDA margins, it's a bit subdued compared to peers. It's around 32 odd percent. Its peers are having an EBITDA margin of close to 33 to 51 odd percent. Also do remember Sami Hospital has been continuously loss making for the last 3 financial years, whereas its peers are profitable. In fact, in FY23 when hotel companies had reported record profits, Sami Hotel has still reported a loss in FY23. Also the debt on the books is largely on the higher side at around 2,800 odd crore rupees. Now these are the reasons why, if you see, the valuations of Sami Hotel are on the lower side. They are asking a valuation of only 15 times EV to EBITDA, which is very cheap when compared to its peers who are trading at a valuation of around 19 to 27 times. Lastly, coming on to Zagler, now this company has no listed peer. It is a unique business. There are no other listed players in the market that are providing this business, and if you see in the pre-IPO placement, they raised close to 98 crore rupees, and that money has been raised from well-known investors like Ashish Kacholia from ValueQuest as well. Now if you see the company's revenue growth over FY21 to FY23, it was around 32 odd percent. EBITDA CAGR was around 19 odd percent. Margins have declined a bit, but this is largely because of a one-time ESOP expense, which was a non-cash expense for the company, and that is the reason also, if you see, the company's net profit growth is a bit lower because of this one-time expense. Now if you remove this one-time expense, and if you see the net profit growth, it is largely at par with its revenue growth at around 22 odd percent. And if you look at the valuations, now valuations also we have calculated after removing this one-time expense of ESOP, and based on FY23 the valuations come at around 60 odd times, and for FY24 if you see, the valuations come around 50 odd times. So valuations appear to be a bit expensive, but given the fact that a lot of well-known investors have put in money in this company, and the business is unique, and it has no listed peer, this could be one of the reasons why the company is asking for expensive valuation of around 50 odd times on FY24 basis.
Okay, Soumit, thank you so much for putting in perspective and context all the 3 options that are available for our viewers when it comes to the IPO world, and along with that, how the valuations stacking up and what are the key highlights about the company. But with this, let's go across to our experts to know that amongst the 3, any of the counter that she likes. And with this, let me welcome on board Shahina Mukaddam. Very good morning, Shahina, and thank you so much for your time to ET Now. Soumit just highlighted the 3 offerings from the IPO space. RR Cable, the management just connected with us yesterday, where they were very bullish about the growth prospects in the domestic as well as exports market, as well as when we talk about the Sami hotels, then the valuation seems to look attractive. Okay, so those were the 3 IPO offerings that Soumit was just highlighting for our viewers. Sami Hotels, the valuations are looking attractive. And lastly, when we talk about Waggle, then this particular company has no peer comparison as of now, but the IPO looks attractive given the fact that it has already got ace investors like Ashish Kacholia, who has already invested in this one. And even if we talk about the price band, that is now at 156 to 164 rupees. So these are the 3 IPO offerings that could be there for from the IPO world, Cheryl.
Absolutely, Shrishti. A lot of IPOs to choose from. And before we go to Shahina, holding just a second, let me just mark the flashes on the bottom of your screen, because finally we've been waiting and we know that the Aditya Birla Group was going to venture into the paints business, and now looks like there is a confirmation on that particular front. You have the company that has said there is a release that's coming from via Grasim, where they're saying that Aditya Birla Group to launch paint business under the brand Birla Opus, and the market launch of Birla Opus is scheduled for Q4 of FY24. So apart from Grasim, let's take a look at what Asian Paints are doing. Remember, Asian Paints was the top loser on the Nifty while we started the show. There you go, taking a knock once again. 1% downtick coming for Asian Paints. Take a look at what Berger Paints is doing. Take a look at Indigo Paints, Kansai Nerolac, all of them. Let's take a look at what these counters are doing, given the fact that you now finally have confirmation. You have the exact or sort of a launch timeline coming in for that paint business. Aditya Birla Group is saying they will be launching their paints business under the brand name as Birla Opus. The market launch is scheduled for Q4 FY24. So watch out for all of those patent counters, and Grasim actually inching higher 0.4% as we speak. And now that we have Shahina back, and Shahina, let's talk about the IPO market then. In general, it's been a buzz. 2023 looks like a great year coming in for the IPO market, because non-stop, at least for FY24, we've seen non-stop IPOs month after month. Now we have 3 of them. You have RR Kabil, you have Sami Hotels, as well as Zaggle Prepaid. Have you taken a look at the financials of these 3 players, and also what would you advise viewers to do while diving into these counters?
Well, I think the IPO market is quite active as of now, and selectively one can look to invest. Like for example, KR Kabil. Basically, if you see RR Kabil, if you see, most of the cable stocks have done very well post IPO, and most of them have been listed in the last couple of years, recent past. So I think some of these do look decent for a long-term investor, or an immediate, you take your money off the table once it lists. So I think to an extent one can invest selectively. Cables looks good, infrastructure is doing well. So I think this would be the better pick. Of course, the hotel stocks are doing very well as of now, but Sami Hotels is very small compared to the others. So I would prefer, if you're investing in hotels, to remain invested in the large cap hotel stocks. In fact, I would even go and say that one can buy an ITC, because eventually 1 year down you'll get a hotel stock. So I would prefer the larger cap stocks like Indian Hotels, which has become expensive, but at the same time gives you that scale.
Okay, so that's the take coming in on the IPO world. But with this, let's move on and let's shift focus to the banking space then, because as you see, Nifty Bank is seen to be recovering from the day's lowest points and now holding a gains of approximately 90 odd points. But the key to note is that just yesterday, what a smart recovery we have seen in the PSU banking index, almost 4% gain that index clocked in. And for today as well, we are seeing some of these large cap names like SBI, Can Bank, BOB, they are all seen to be supporting. And the big question is that how are the valuations stacking up, because the kind of a journey that we have seen on these PSU banking stocks has been phenomenal, and that has been on the back of factors like the asset quality was seeing an improvement. The valuations were quite cheap, but now, given the run-up in the PSU banking space versus the private banking space, can we still say the same, that the valuations are still attractive, or now is the time to switch to the private sector name? Let's put that question forward to two of our very special guests. Onto the technical front, we are being joined by Kunal Bothra, and onto the fundamental, Shahina back again. And Kunal, very good morning to you. What's your take on the banking space, the leadership or the kind of move that we have seen in stocks like BOB, SBI? Do you believe that that's expected, that will continue? And what's your take on the large cap space, because you have on the private bank space, because you have been bullish on HDFC Bank?
Well, yes, good morning, Srishti, Shradul, as well as Shaina and everyone. So my sense is that PSU banking stocks are typically high beta in nature. So they would always tend to generate a higher alpha in terms of returns whenever there is momentum and there is any kind of a trend breakout. Now, on the chart busters, I was mentioning that I'm extremely bullish on the Bank Nifty, and I'm actually expecting the Bank Nifty to make a new high for itself, possibly in just the next couple of days, given the kind of indicator breakouts. Now, in that context, the mix of the private sector banks as well as the PSU banks is very, very attractive. I would actually agree that the PSU banking stocks can stand to gain much higher, as I said, because of the higher alpha. I would be bullish on the slightly higher beta stocks from the mid cap end of the PSU banking names, the likes of PNB, Bank of India, Union Bank, etc. They are extremely strong charts. Even Bank of Baroda, I think, is looking quite exceptional on the charts at 210 odd levels. So many of the tier 2, if you can call them, banking names, PSU banking stocks looking very attractive.
All right, tier 2 PSU banks looking very attractive, and you've seen a lot of them actually outperform in yesterday's trading session. Today also they are recovering very smartly from the day's low. But Shahina, what's your view when you do that comparison between PSU and private sector banks? Because if you look at the private sector banks, at least the larger names have not done much in this year, while the PSU banks have actually amazed or shocked a lot of, surprised a lot of them on the positive side. Which side of the fence are you on, private or PSUs?
I classify banks into two segments. One is my portfolio holdings, which I would say that any investor needs to have the large private sector banks like ICICI Bank, HDFC Bank, India, even Kotak Mahindra actually, if you want to classify it as a private sector large bank. In a long-term portfolio, these banks need to be there because technology in the long term is going to play a very important role as to which banks gain market share. Having said that, I think the PSU banks look pretty attractive even now based on pure valuation, but I would play this purely on a technical basis or maybe medium term basis. Like for example, valuations, though the stocks have run up a lot, PSU banks, they are still very attractive. Like for example, if you take SBI, the largest in the space, price to book is just 1.4 and it is growing. We are expecting credit growth in double digits, mid double digits. So I think there is potential even now to report very decent earnings, improvement in book. The other banks, which are smaller, but at the same time, as Kunal mentioned, look pretty attractive, especially on the charts in terms of pricing, also valuation. Like for example, Bank of India that he mentioned, the price to book is just about 0.5 times. So really there is, for the medium term player, this still looks attractive. Of course, Canara Bank, Bank of Baroda, all these stocks offer decent returns even now going forward for the medium term based on valuations. Also, one more point I would like to add that the RBI is coming out with very good policies which is actually increasing the liquidity, overall liquidity with banks to drive credit growth. And like for example, yesterday there was a change in how you can book your profits for the bonds that are traded. So I think to that extent profitability will again be supported because public sector banks do have a large book of bonds. So I think overall PSU banks do look good for the shorter medium term, definitely, and one can keep reviewing.
Okay, so that's the take coming in from both of our experts, Kunal as well as Shahina. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned and start writing to us.
Welcome back. You're watching Buy Now, Sell Now on ET Now show, where we get your answers for all of your stock-related queries. And viewers, let's quickly start with the queries then, given the fact that we have paucity of time. And today our experts are Kunal Bothra as well as Shahina Muqaddam, and the number on your screen where you can write to us. Let me start taking the queries that we've already got in our boxes. This one has come from Akhil. He's writing to us from Delhi. He's saying that he is an investor, Shahina, 2,600 shares of BEL. He's purchased at 114 rupees per share. He wants to know, he wants to invest this particular counter for the longer term and add some more of this particular stock. Do you think right time to add some more of BEL? Should he wait for the dip? Also, for the long term, makes sense to stay put with this one.
Yeah, I think VL both fundamentally is looking up. A lot of investments going in the segment. Infrastructure, is really picking up in terms of government expenditure. Also in terms of shorter term as well as medium to longer term, I think it makes good investment, so you can buy.
Okay, moving on. And Kunal, what's your take on GIC housing finance? Sonita wants to know what could be the immediate target in the next 1 to 2 days.
Can you repeat the name of the stock? It's
GIC
GIC
housing.
Housing. GIC Housing over the last many weeks has gone into a bit of a sideways range. I think from 2022 high, the stock, or rather the August high, the stock was almost at 211, corrected back towards 180, now at 197. So I would probably expect the stock to first get into a breakout mode. So I think only about 211 is where I would expect that the stock can get into a momentum, because otherwise the stock would probably get into a drag and continue to cool off. So if you're already holding, I think you can continue to hold on, but keep a trailing stop loss of 180 if it's a short to medium term kind of a time frame. But on the upside, about 211 is where I would expect the stock to head towards even 240 for GIC Housing.
All right, this one is coming in from Yashri Bhatji from Vadodara, and this one is for you, Kunal. We spoke about the PSU banks earlier in the show, but this one, Yashri has 700 shares of Bank of India at a price of 80 rupees per share, and then further purchase some shares at 29 and as well as at 39 rupees per share. Wants to know whether to sell sell the stocks of Bank of India, given the fact that making some sort of a profit right now, and re-enter at a lower term, or stay put with this for the medium to long term.
Cheryl, this is not some sort of profit. This is a phenomenal profit. So congratulations to the viewer, because you've managed to do that classical buy on dips for a stock like Bank of India. Now, I strongly believe that the stock has confirmed a breakout on the charts front. So, for the last 10 years, in fact 13 years, from 2009 or 10 high for Bank of India when the stock was at 400 plus levels, it's been consistently making a pattern of lower highs and lower lows. And I'm talking of it on the quarterly charts. Now, for the first time on the quarterly basis, the stock has confirmed a breakout of this lower highs and lower low pattern. So the downtrending pattern is reversed for Bank of India. This could be a very significant positive for the stock over the medium to long term. So my sense is that since you purchased at a phenomenal price for Bank of India, I don't see any reason why you should be looking to book profits in a hurry. I think you should give it at least another couple of years for the entire trend on the upside to play out.
Okay, moving on. And China, I'm not sure whether you tracked this one or not, but this query is on Sumit Securities. This one is in holding company of related to RPG Group, has investments in Harrison Malayalam, CET, etc. And Mayank Saraf is already holding 500 shares from a price of 950 rupees. And what he's highlighting that it is available at quite a discount, the holding company discount. And at this point in time, does it make an attractive bet to continue holding this and maybe add more for the next 2 years, given the fact that there's so many discussions that are going in the SEBI that could actually benefit the holding companies?
I'm sorry, I don't track the stock, but I think overall holding companies, the discount between holding companies and the regular listed companies is coming off in most cases.
All right, this next one is coming in from Poonam from Gurgaon, and this one is for you, Kunal. Arvind, 80 shares at a price of 143. Birlasoft, 300 shares at 470 rupees per share. Wants to know what to do with the counters right now.
Birlasoft, I think you can continue to hold on. In fact, my sense is that if the stock corrects by, say, at least a margin of 10 to 15% from the previous swing highs of 535, which means maybe closer to 480, 485, is where you can look to even average further. Even for Arvind, the stock has already corrected or gone through a correction, now starting into a bounce or a rally phase yet again. So I believe that hopefully in this leg of uptrend, the stock can come back towards 180 to 185 for itself. 165 is the current price for Arvind. So I would suggest a hold on both of these names. Arvind, maybe close to 180 is where you can look to book profits.
Okay, Shaina, the next query is from Rajesh Maheshwari from Indore, and he wants to know about Indus Stars as well as GlaxoSmithKline. He wants an outlook on these particular counters, whether he can go ahead and make fresh investment in both of these.
Well, I would not advise any fresh investment in Indus Towers, though it it has bounced back a bit because of Vodafone, getting back in terms of certainty of its existence. But I would prefer to avoid the stock. And in terms of Glaxo, yeah, I think it makes a good long-term investment. They're launching nice generic products in the domestic market, and they are a steady long-term dividend play.
So that's the take coming in on GSK Pharma. But on that note, let's slip into break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related query. This one is coming from Latish, writing to us from Tiruvananthapuram, and this one is for you. This one actually is for you, Shahina, because the viewer has Aurobindo Pharma, is a long-term investor and has managed to purchase Aurobindo Pharma at a price of around 671 rupees per share. She wants an advice on Aurobindo. Where is it headed from here on? Fundamentally, now you think the tide has turned for Oro, and also the fact that if you can share some target that she can watch out for.
Yeah, I personally also hold Aurobindo from much lower levels, as well as I have been adding over a period of time. So I am very positive on Aurobindo. I believe it's a dark horse. In terms of valuation, it still remains very attractive compared to its peers. Also, its production sites have been they have been examined by the US FDA, and they have got they have passed the mark. So I think to that extent they're pretty safe, at least for the medium term, and they have got new product launches in the US also. So I think Aurobindo Pharma looks good to hold and to keep adding at any day.
Okay,
I would give a price tag of 1,200.
Okay, there you go. You have a price target as well. But moving on to the next query then, and the next query is on Balrampur Chini. Kunal, this one is from a fan of yours named Archana, and she has 200 shares of Balrampur Chini from a price of 410. And what a stellar run that we are seeing on all the sugar counters today on the back of so many fundamental news, and even DAM Capital initiating a coverage. So at this point in time, good to book profits or continue to hold on?
In fact, yesterday I flagged off Balrampur Chini as one of the recommendations. Even today morning, it was one of the stocks from the mid cap arena which I had suggested as a buy. Looks very attractive as a short term setup. Now 445 was the target which I had mentioned. I think if I'm not wrong in the morning, the stock seems to have reached those target levels. So if you are a short term trader and you're looking out for a 10% profits, then I think it's a good time where you can look to book out profits for the stock at current levels, and then maybe keep to buy back again if the stock happens to dip and come back towards say 420, 425 mark, which was the breakout point earlier.
All right, another one coming your way, Kunal. This one is coming from Kameshwari, who's writing to us from Hyderabad. We have a lot of actually first-time writers to us today, and has about 50 shares of Tanla Platforms at a price of 1,100 rupees per share. Wants to know what to do with this particular counter, exit or hold. And the next one is on Aarti Industries, short-term target.
So both the stocks I would suggest to hold on. Tanla Platforms, I think the stock has corrected from 1,300 very recently, I think 2-3 months back, to now. I think at a point the stock was almost at 950 or 900 mark, if I'm correct. So it's now trying to make a comeback. It's formed a bottom at this 900, 950 level. So looks attractive, and hopefully if the retest begins for Tanla Platform, then the stock may come back towards the 1,200, 1,300 mark over the near term. Aarti Industries also, I think after that yesterday's spike, the stock seems to be getting into a breakout mode. Now, after such kind of spike and given the market conditions, it's bound to be that the stock may consolidate for a couple of days. But if you can just ride out this phase for Aarti Industries, then I believe that potentially the stock can do pretty well. So if you're a short-term investor and have a time frame of 1 week or so, then I don't expect significant fireworks in either of these two names. But if you can hold on to it for say another 3 months or so, then I think the upside potential could be significantly high.
Okay, Shahina, the next query is from V. Mathur. He's a senior citizen from Delhi, and he is holding two counters from the Tata Group. Firstly is Tata Chemicals, bought 200 shares at a price of 905, wants a target for the next 2 years. And your take on Tata Power, he has 4,900 shares at a price of just 104, sitting at great gains in this one. Can he add more at current market price and hold on for the long term?
See, Tata Chemicals, while the stock has given a very good rally because the soda prices, caustic soda prices have moved up in the last couple of months. So it is looking good currently, and I think he can continue holding. Maybe he can look for a target of 1,250. And Tata Power also looks decent at current levels, so he can continue to hold for the shorter to medium term.
Yeah, this one is coming in from Ephraim. I hope I've pronounced your name rightly. And he's writing to us from Dubai. Kunal, he has 120 shares of Nelco at a price of 770.24 rupees per share. He wants to know whether he should stay put with Nelco or look to exit at this particular counter.
I think you should stay put. Stock is at 800 plus levels. It's been consolidating over here for, I think, the last 3 months, July, August, and so far in the month of September. The stock has been into this, we can call it as a volatile range, 875, 880 approximately as the higher end of the band, and then I think closer to 750, 770 as the lower end of the band. So it's been into this 10% band. I'm assuming that possibly the stock may consolidate for another couple of months, because ideally in a consolidation, we look out for at least 2 or 3 retests of the previous swing lows. So if that happens, then I think that could be a good opportunity where we look to add further for Nelco if your time horizon is medium to long term at least.
Okay, that's the take coming in on the metal space. But with this fears, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back. To Buy Now Sell Now show, where we get you answers for all your stock related queries. And continuing the same, Kunal, let me come to you for the next query then, and this one is on SJVN, the stock which has seen a phenomenal run up since the start of the year. It's already given a return of over 100% now, and a viewer named Uday Singh from Hyderabad is holding 3,000 shares from a price of 56 rupees, and he wants to continue holding this for the next 3 months. Will that be a good move to continue holding this given the kind of run up that we have already seen? What will be your advice?
Well, so it's a good stock. It's done exceptionally well in the last 6 months or so. But then, expecting that these stocks would probably do or deliver, similar returns in the next 3 months is a very far stretch for many of the mid-cap names. Now, if you look at the indicators, you look at the volume setup, SJVN recorded one of the best volumes on a daily basis, I think, in the last 2 or 3 days. And surprisingly, the stock has stalled its rally in the last 3 days. So somehow closer to this 80 level, 75 mark, you see a lot of resistance or supply coming into the stock price, which means that there is a strong case that the stock may go into a pause or even a correction over the near term. So if your time horizon is restricted to next 3 months, you've already been sitting on good profits, I strongly believe that it's a good time to book out profits over here for SJVN, and then look to buy back maybe if the stock corrects and dips back lower or gradually moves on the downside.
All right, this next one is coming for you, Shahina, because this is coming in from a viewer, Krish, and he wants to know about Timken. 50 shares he's holding at a price of 3,317 rupees per share. He wants to add more of Timken in his portfolio and also hold on to the counter for the longer term. Do you think that the overall performance of the counter or the stock, as in the company wise, the financial wise, merits addition in the portfolio?
Well, I think metal stocks are picking up. At the same time, I would advise that the investor waits for some correction to add on to Timken. Basically, the numbers, if you say in the past couple of quarters, has not been that exciting. So I think buy at dips. It's a decent management, but don't buy right away.
Now, what's your take on MOIL? KVS Money is holding 140 shares at a price of 208. So should he continue holding this one?
So again, I would suggest to book out profits over here for once, at least for MOIL. Now, it's a very low beta stock. I remember a phase, I think in 2021 to 22, as well as 2018 to 21 for the stock, where it had gone through a major consolidation, a time and a price-wise consolidation, and that generally doesn't augur well for the stock, and that too of a PSU stock, which has been typically low beta. I would suggest that you should look to book profits over here and then consider buying back. So, it's a very gradually moving stock. So, if you expect the stock to dip back towards, say, 210, 212 mark, then I would probably expect that could happen in the next maybe 1 month or so. So, good time to book out profits and look to buy back closer to 110 or 210.
All right, this next query is coming in from our viewer. I've missed his name actually. Yes, his name is Ranjit. He's writing to us from Gurgaon. Firstly, Kunal, what's your Friday plan? Which movie are you planning to watch this time around? And also, he wants to know what's your view on PVR Inox. Can he actually look to buy this one for the short term?
I frankly don't know which movie is releasing this Friday. So
You watched Jawan, isn't it?
yes, I did.
All right. So you have limited options.
Yeah, limited options.
We watch it.
Luckily. So now on PVR Inox, I think it's a good time to start booking our profits over here because the stock has done exceptionally well from 1350 to 1800. Surprisingly, the indicators are back again into an overbought territory for the stock. I believe it may not just be a temporary cool off for the stock price, but the stock should come back towards the 50% retracement or 61% retracement of this entire 500 odd point rally for PVR Inox. So I would expect the stock to come towards at least 1600, 1625 before there is any kind of a major stability or a good risk reward to go for a fresh buy on the stock.
Okay, Shaina, the next query is from Parvinder Singh, and he's holding 50 shares of Sumitomo Chemicals from a price of 445 rupees, and he's been holding this counter since September 2022. Has given no returns to him yet, but the kind of news flow that we are having for all these chemical stocks, do you believe that this is a good time where he can earn some returns out of it, or he should just move out of this one?
Well, see, Sumitomo has been doing reasonably well, but at the same time, I'm not too positive on chemical stocks as of now still, because you have the raw material prices that are moving up, and China coming back into play. But at the same time, I think Sumitomo is looking good if you're holding it for the medium to longer term. The numbers also have been relatively stable, so one can be holding the stock.
Moving on, then let's kickstart with the rapid fire. Very long query coming in from Sagar on the since goods space, especially the liquor and distillery space. But Shaheen cutting short. He has invested in most of these counters during the COVID time, and he's making spectacular returns on the fundamental side. Do you think it makes sense to stay put with this one? Are you seeing a structural shift in the story in the since goods space?
Yeah, I think one can invest in the whole space, done well. I think the prospects remain strong.
Shaina, what's your take on Munjal Auto? Satyan from Palakkad is holding shares from price of 44 rupees. Wants to know what are the prospects for the next 1 year, and can he add more at current market price?
Well, he should buy it at dips. It looks decent, but I would buy it at dips.
Okay, Kunal, Apollo Tyres, Sanjay has at the price of around 235 rupees per share since June 2021. Should he look to book profits or should he hold on?
I think you should look to book profits over here. The stock is showing a downtrend which should sustain for at least another couple of months.
Okay, Kunal, I beg your pardon, Shahina, Satya wants your take on Grasim, Balrampur Chini and MCX. He's having more than 30% profit in all the three counters. So any stock that you believe that where he can go ahead and book profits?
Well, I think all three are looking good. Maybe Balrampur Chini, he can look to book his profits as of now.
Okay, Renu wants to know, Kunal, about SAIL, 240 shares at 84, Indian Hotels, 300 shares at 156. What should she do?
Hold Indian Hotels and look to book SAIL and possibly move to NMDC.
Kunal, Ravi wants to know between NHPC and SJVN, which one could be a better bet, where he's looking for fresh investments for the next 1 year.
Given all the parameters or most of the parameters, I would prefer NHPC at current levels.
Alright, Sudha is making 50% profit in Gravita India, Welspun Enterprises, ITD Cementation. Considering the mid-cap correction, Shahina, what should she do?
Well, I think ITD Cement does look decent at current levels. She should hold ITD Cementation. Remaining, she can look for profits at any levels.
Okay, but with this, viewers, we are completely out of time in this edition of Buy Now, Sell Now. Thank you so much, Kunal and Shahina, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together as well. But don't go anywhere. Markets at noon will take the action ahead.